where did that go? And we look at the cash flow statement and we go back in and we go, well, you had a really successful year plumbing business. You started to accumulate that $100,000 in your bank account, and then you went and paid for a vehicle. You went and paid cash for a vehicle because you didn't talk to me about it, and I would never recommend that. Use the bank's money to acquire these assets, and keep that cash in your bank account. But you went and you did that, and then you took, $20 or $30,000 out yourself. And then all of a sudden we get to the end of the year. Those really aren't upfront deductions in your business. You've got a big tax bill. Now you're out of money. Yes, you made $100,000. You've got zero cash left, and now you're in a bit of a problem. And that's because people aren't managing their cash flow and their cash resources appropriately. As soon as we start seeing profits, we start getting greedier. We go, oh, well, we're making more money. We need to take more cash out. Well, that's not necessarily how that works. And I usually call this the wind from the west sort of metaphor, right? Where if we're not making enough profit and we're not managing our cash resources appropriately on that profit, if the wind blows out of the wrong direction, we get caught off guard. And next thing you know, we're out of cash. And that's where, those 82% of businesses that fail is because that happens. It's not that they don't have a great business. It's that they weren't paying attention to the metrics and certainly not paying attention to the cash flow.
I've read Warren Buffett's book when I did my MBA, and like the number one thing that he looks at in buying a business, guess what? Cash flow, right? The discounted cash flows, and maybe we won't get too detailed on discounted cash flows, but obviously $5 in a year from now is not worth $5 today, so you discount it for future cash flows. But and that's another nuance to think about your cash. But at the end of the day, it's like, what's happening this month, this week, depending on the size of your business, but regardless, I look every day. But yeah, you're right. Cash is king. I would say, I won't say the company, but my brother worked for a public company. He had joined it recently, and within 3-4 months of them working, everything looked fine. They were a listed company on the TSX. There was some funny accounting stuff going on, so it looked better than what it did. But guess what? The owner, president, CEO, and the CFO somehow never looked at cash. And when they looked at backwards, they just ran out of cash. This company that had like 400 trucks on, it's not a small company. It's a large 9-figure company. And at that size, you can evaporate really quickly. And even if you're a quote unquote small 7-figure business, the impact to your family is massive, right? And so I think it is a fiduciary responsibility that people need to focus on that cash, which I love going down that rabbit hole, because at the end of the day, that is the barometer for everything. If you're making good cash, chances are you're making good profit, right? Versus the other way around is not always true, to your point, based on your expenses. At least that's what I find in my experience.